So let's talk about Ghana's Securities and Exchange Commission, which last week unveiled a new master plan for the country's capital market. This was the first of such a plan that looks to catalyze the Ghanaian securities market from its present position into a new horizon over the next 10 years. Giving us some deep dive into the new master plan now is Fred DUVOR, the CEO at Apakan Securities, a licensed dealing firm based in Accra. Fred, good to have you on the show tonight. Welcome.
Yeah, Boisson, yes, good to see you again.
It's good to see you again, my friend. So let's talk about this a little bit. What's the overall focus or intention of this new master plan that the SEC unveiled a week ago?
Well, essentially, the capital market master plan hinges on 4 strategic pillars, which are basically to improve diversity of investment products and liquidity on the market, by building market understanding and confidence to encourage active participation of issuers of securities and investors. Secondly, is also looking to increase the investor base to achieve a deeper penetration of capital market products, and also to strengthen the market infrastructure and improve market services. And finally, it hinges on improving the regulation and enforcement and market confidence. Now, the implementation of this plan will happen in a 3-phased approach, which is expected to make the market more attractive, increase the competitiveness of the market by deepening the quality and breadth of the products, and also introducing more sophisticated products, which include margin trading and opening up short selling to all market participants.
But my first question is that we'll get a little bit to the implementation. Any idea, Fred, why the SEC floated this new 10-year focused market plan? What's the background to it?
Well, really, the regulator, which is the SEC, together with the government, intends to position Ghana as a regional hub for financial services. And I believe they think the plan will complement the government's efforts in building an ecosystem to make the country the preferred destination for regionally focused financial services hub, as it indicated in the 2019 budget and economic policy statement. They also expect the implementation of the plan to accommodate the financing needs of the growing economy and also create investment opportunities for wealth creation. So I believe that is the idea that the SEC anchored on to draw up this 10-year plan.
But within the market community, how has your community, you market professionals, reacted to this new capital market master plan? What comments are you hearing on the ground since last week when it was unveiled?
It's been largely welcomed by the investor community, being both security issuers and investors. The market has been clamoring for regulator-led reform to deepen the product offering on the market. So the launch of the master plan has brought some excitement among market participants and professionals. And the next 10 years, the whole market is buoyed for what's going to happen in the capital market.
Do you think the new master plan would be a silver bullet or a game changer for Ghana's capital market? If you look at the last 10 years, now the master plan has a 10-year horizon.
So the plan is largely built around a vision, which was discussed extensively and agreed on by all stakeholders and market participants. So we see that the plan has very audacious and much needed reforms, following the gains made from the entire cleanup of the financial sector years ago. We expect that having this plan will augur well for market activity going forward. I believe that has been well thought through, and it should impact greatly on the capital market and the economy as a whole.
So let's go back a little bit to the execution of the new master plan. Who will it involve? Are there committees set up to measure how this plan is moving forward? How is the SEC planning to evolve it? Are there other government agencies or market institutions outside the capital market that are involved or will be involved in implementing the new master plan?
So the beautiful thing about this plan is an all-inclusive plan. So every market player will have a part to play in ensuring the success of the plan. However, there are certain various steering committees that have been set up to oversee the aspects of markets and products. Another committee set up to oversee the education and research of in the market. Another committee is also overseeing market infrastructure, and finally, another committee will also be looking at the legal and regulatory framework. So the phases of the implementation would be from 2020 to 2022, being the phase one, where these various committees have certain KPIs that they need to execute. The second phase taken on from 2023 to 2025, and then the third phase from 2026 to 2029.
Okay, so in terms of the various pillars of the new master plan, which of these pillars do you think the most important and the most immediate that the market authorities need to attend or build up very quickly on? Is it on the regulatory side? Is it on what pillar? Which of these pillars do you think should come first? Should be the chief focus?
I mean, with the turmoil that went on in our markets a couple of years ago, we've seen the need for a strong and legal and regulatory framework. So, in my opinion, I believe that is the most fundamental, and that needs to be well structured and cover all the various aspects of the market. That followed by market infrastructure, which will serve as a base to allow market participants, both issuers and investors, to rely on to be able to perform their functions in the market. So for me, I think the legal and regulatory framework is the most important, and I believe that the exchange will also share this, looking at where we've come from over the past 2 years.
Who else is buying into this plan? The central bank, the federal government?
Yeah, so it's a holistic, like all parties in the financial markets are involved in the drawing up of the plan. The plan was actually unveiled by the finance minister and officials from the central bank as well. So inputs have been taken from the executive arm of government, from the central bank, from the regulator themselves, and all this has fed into the development of the plan, because I mean, the exchange cannot. The Securities and Exchange Commission cannot work in a silo, in isolation, because the activities of the market straddle between the capital market and the money market, which is overseen by the central bank. So it's more like an all hands on deck kind of structure and plan that everybody is putting an effort into implementing.
Very interesting deep dive into that particular new master plan. We wish you folks all the best. Well, very quickly, the central bank, the Bank of Ghana, made a surprising interest rate cut to 13.5%. Did that take you by surprise, Fred?
Yes. It actually did, and actually the entire market. It was unexpected, well and truly, and it was bold, but all the same, it was a plausible move by the central bank. Looking at Ghana's current macroeconomic environment and conditions. What is evident is that we can see that the central bank discounted the effects of the recent tax increases and high fuel prices on inflation in the near term. Just the policy rates to align with T-bill rates in order to sustain investors' demand for treasury securities. Whether or not the surprise cut will trigger a knee-jerk market sell-off, as we saw in January 2019, is a bit too early to tell. But we're still waiting to see how the market will react to the rate cuts.
Yeah, we'll see how the market reacts to the latest rate cut moving forward. So we're going to check in with you as we move on to between now and the next MPC meeting, which is in July, of course, which will now takes us effectively to the second half of the year and see what will likely change and the impact of the current this surprise rate cut by the Bank of Ghana. Thank you so much for your time today, Fred DUVOR, CEO at Apakan Securities in Accra. Thank you so much. Have a pleasant evening.